You might as well call him another Michael Corleone, as he is the son of one of the godfathers of community banking. A CEO in waiting, right? The president of Liberty Bank and Trust in New Orleans, and he has his own ideas about the future. His name is Todd McDonald, and we'll discuss banking and all above coming up. You're in the Enterprise Zone at the Nasdaq. Hello, everyone. This is Jabari Young, senior writer at Forbes, and I am at the Nasdaq MarketSite. And I am joined by Todd McDonald. He is the president of Liberty Bank and Trust in New Orleans. Now, this is the largest black-owned bank in America with $1.1 billion in assets. And Todd is also a Forbes BLK 50 member. Todd, my brother, thank you so much for making the trip all the way from New Orleans here to New York, man.
Thank you for having me.
Hey,
it's
man,
an honor.
listen, it's a pleasure, man. Largest black bank in the world. I plan on asking you for a loan after this.
Hey,
going nowhere.
Done.
Oh, there we go. Y'all saw it. It's done, right?
It's on camera.
No doc loan.
Well, I don't know about that. I don't know about that.
Listen, man, we're here at the Nasdaq, and as we talk, it's red, right? But I'll say, if you had to give me a stock, something that maybe nobody talks enough about that's worked well for you, or that maybe you're looking into, what would that be?
Sure. So I'm not a registered investment agent, so I cannot give any particular stock picks. However, just sticking to what you know and what you're familiar with.
Yeah.
And so as we were talking, you said that you made an investment based on your daughter's interests. That's a pretty good way to make a decision, because she's probably in the know on how that product or service or software is actually operating within her demographic. And so since she's 11, a long road ahead. And so if they're making right decisions, that's the choices.
And not to be secretive, Todd is talking about some Nintendo stock.
Okay, yeah, I didn't.
From my over-the-counter markets, though, so it's a little bit tricky. But Nintendo, listen, it's been around since I was a kid, so I figure it's not going anywhere. They're ready to release a Nintendo Switch, so, you know, a good stock to invest in. And she also says some Mattel as well.
Okay.
Yeah, I asked you the question, and here I am answering it for you.
Well, hey, you know, but Warren Buffett, he always says, look, just bet on brands that you feel are just solid.
Absolutely.
So Coca-Cola, Gillette, all of those brands. So Nintendo and Intel, I feel fit right in there.
It's not going anywhere. I figure it's going to be here. It's going to be here, man. Listen, it's 2025, and a lot's happening in the world. What's been the soundtrack that's been keeping Todd McDonald creative? Like, what's been that music, that sound that's been you've been relying on?
Nothing is promised.
Nothing is promised.
Nothing is promised. Well, no, that's just how I'm navigating.
I'm thinking that's a song.
No, no. I don't have a specific song, but just being able to adapt to the changing time.
Yeah.
And so when you look at banks, especially like Liberty Bank, we have, you know, loans out to individuals and businesses across the country in various sectors. And so you look at the economic space right now that we're in, and they have a lot of adjustments from cost of goods, for food, for medical supplies, and building materials. And so we do a lot of loans in affordable housing developments across the U.S. And so those loans, we're you know, changing underwriting to kind of conform with where we see the markets are going. Yeah. And so the end client is making those adjustments as well. And so we're resetting and adjusting. And again, nothing is promised. So just a lot of inspiring music, I guess I should say.
It sounds like a little bit of Sade, nothing as good as the first time. That's what it sounds like. I don't know if, you know, it's promised, but nothing as good as the first time. Maybe a little Sade is keeping you creative.
I think all of that is applicable.
Yeah, listen, the Sade's keep me creative. Always has. Always has. Well, listen, Financial Literacy Month is in April, but we always talk about it on this show. It's an entrepreneur and business show. So tell me, what was your best piece of money management advice that you've learned over the years and that you would give to your kids or some strangers?
Understanding how to buy your first home. So financial literacy, you know, it starts with the A, B, and C's of credit, you know, making sure your credit score is right, making sure you're saving money. But that very next step to make you apart from the rest is to buy your first home. And so financial literacy is a perfect gateway to start realizing the value of owning your property. Yeah. You build wealth, you build equity in the home you purchase. You can deduct interest. You can deduct many things based on the different tax codes. Yeah. And a lot of young professionals are renting. And renting is not bad, but as soon as you can get into your own home and have a mortgage or purchase a property, that's the best financial advice I can give right now.
Yeah, absolutely. Well, listen, that's a perfect segue. Before we jump back into the mortgage conversation, Describe the banking sector in one word, right? Because again, a lot's going on. We have interest rates still high. We don't know what's going to happen with tariffs. A lot of geopolitical uncertainty that's going on, and that's going to affect prices. And you being a banker, that's going to affect how you do business as well. But if you had to give me one word, as we sit here in the middle of 2025, right? Summer's approaching. What word would that be?
Conservative.
Conservative. Why conservative?
Due to the uncertainty, no one really wants to go too far out in one particular lane.
Yeah.
And so you saw a few banks that failed in 2023. They went long on certain options, and that came back to bite them. And so a lot of lessons were learned. A lot of examiners now at FDIC and all of these different regulatory agencies, they're now applying those learnings to the environment that we're in right now.
Right.
And so I say conservative is because the way we stay in business is if we get the money back after we loan it out.
Yes. Yeah.
And so any one of these triggers or tariffs or influx of costs of goods can really put pressure on that end client,
Right.
which then turns to pressure on repayment.
Yeah.
And right now, banks want to stay in a position with flexibility and being flexible so that we can pivot as soon as things change back.
Yeah.
Hopefully they change back soon.
Yeah, well, listen, I'm going to play the conservative consumer, right? Because we have some Forbes BLK members in attendance, and I want them to help me play conservative consumer. So I'm going to work maybe 2 or 3 of their questions into this overall conversation that they sent. But the overall, state of the consumer is a little tricky too, right? You have jobs, people getting laid off left and right. Me and you and your dad talked about this in your very office in New Orleans a few months ago, and he predicted there were going to be some trying times ahead. But as he says, O for obstacles, O for opportunity, right? That's exactly what your dad, Todd McDonald, always says. But conservative consumer, you mentioned mortgages, right? Why, if I don't currently own a mortgage, would I want to go get one right now? Again, interest rates are high. And your very, 2004 annual report, you guys have mentioned that, insurance companies are pulling out of the southern Gulf states, right? And so now you got a cost of insurance is going to go up. That messes with your price. Why, as a conservative consumer right now, right? I hope I got a job. Forbes, I hope they ain't around because I hope I have a job. But regardless, why do I want to jump in right now and purchase a house? And even if it's with Liberty Bank, largest black-owned bank in America, why now? Why can't I play conservative and wait this thing out?
And this is just from what I'm seeing. They have a lot of deals out there right now. They have a lot of individuals and families that are feeling that pressure. And I'm not saying to be a shark when there's blood in the water, but there's opportunities. So the obstacle is there. It's here right now. So then there's an opportunity. So the opportunity is to purchase a home at a discounted price just because of the sensitivity.
Are they truly discounted, though, because inflation's up?
Well, you can look at it in a lot of different ways. However, if you look at the Zillows of the world or the Realtor.coms of the world, you'll see a lot of properties that have been on the market for 300 days, 400 days. And so you have an individual that's trying to move out of that house to maybe move across the country, to move closer to their parents, or because they can't afford the insurance or taxes anymore. We have a lot of older professionals now that are thinking about retirement. And so they want to reposition their investments. So you have all sorts of reasons why individuals are trying to sell their homes. But since it's so competitive, everyone, you look at it, I look at it pretty often, but you see reductions, continuous reductions. And if you look at the histories of a lot of these sale prices, they have multiple reductions. And so that's why I'm saying it could possibly be a benefit to buy now with the intent to refinance later if interest rates come down or when they come down, because I believe that this administration is focused on getting the interest rates down.
Yeah. Well, listen, you said, there could be some opportunities, but I did look at Zillow because I am in the market. I'm in the market for another house. And listen, I saw some prices go up.
Really?
And I saw some inventory come out, right? Okay. What are you guys seeing in your part of the world in New Orleans? But again, you guys are stationed all around the country. What are you guys seeing from the consumer where someone can say, okay, this opportunity is this? I was talking to Don Peoples about, hey, give me 5 places where to look. And he was saying Washington, D.C., and I'm hearing a lot of real estate opening down there and in Texas and in the Fort Worth area. Where are the opportunities right now in the country?
Texas is definitely a hot market. You have a lot of companies that are bringing their headquarters from the West Coast into the Texas market.
Right, regulation.
Correct. And I think they had just Houston specifically. I was just there this weekend, and I think they had 200,000 new families move in just last year alone. And so you do see an influx of individuals that are searching for property. Those situations are pretty unique because, as I mentioned, with the changing times, a lot of corporations are going to probably do layoffs. They're going to probably convert a lot of physical positions into AI. A lot of companies are adopting AI, as you know very well. I think DC is a very unique market because you have a lot of government employment, and so with those adjustments that this administration is making, you're going to see some turnover in property there, definitely.
Yeah. What about car loans, right? The mortgage loans are there, right? The other big consumer item is the car loans, right? Why in the hell would I purchase a car right now? 25% tariff on steel, 25% tariff on aluminum. That's half the car weight right there, right? And then you got all the other stuff that the parts and everything that goes into it. Why am I going to Liberty Bank and maybe getting out a loan so I can go purchase a brand new car knowing that I'm going to pay astronomical prices? What's the incentive?
I don't know if there is one.
No.
Just to be very candid and honest.
A used car, maybe.
A used car, maybe. But yeah, certainly you want to be very conscious of what brand you purchase. Obviously, with tariffs, you're going to have uptick in costs just from being brand new, and then also if you have to repair it, the parts.
The parts, yeah.
And so I thought I read somewhere where one car company, they just said, stop bringing in the cars to the United States because...
That was Mercedes. Mm-hmm. Yeah.
Yes. So certain companies are making those judgments right now, and you just want to be aware of them.
Yeah.
And because the worst thing you want to do is buy a particular brand and can't find the parts. And so, I know some car companies, you can't sell them without taking a 35%, 40% discount just because of certain, things that they're dealing with as well. And so just be very cautious and try to pick a vehicle that you can afford with it being, in a repair position or brand new. It goes both ways.
Yeah. Are you guys seeing a lot of loans for cars, or has that slowed down?
No, we've actually seen a lot of default, not on our portfolio, but on portfolios of other banks that have a very deep niche into subprime auto lending.
Yeah.
So the subprime.
Is that a carryover from the pandemic? I know a lot of people went and purchased cars, and you read some of the horror stories about some of these cars. They just would put some paint on them, but people wasn't doing their due diligence, and they were ending up with these bad cars and running into these problems. And then, I was reading one sister. She had a $500 car payment and a big giant repair. She worked 2 hours or an hour and a half away. She couldn't get to work, lost a job because the car broke down, and she couldn't repair it. Is that the type of stuff you see?
Oh yeah, across the board. So losing income from layoffs, or just the fact of fuel, repairs, the insurance increase on your home if you own your home, the taxes, all of these things make people feel it in their pocket. And what we try to do at Liberty Bank is to improve people's cash flow. So we try to refinance individuals out of predatory loans or loans that are overpriced due to perceived risk. And so a lot of auto lenders in subprime markets, that's their area, their niche. So you might have someone with a 20% interest rate on an auto loan. And if that auto gets into an accident, or that person gets into an accident, the repair costs on top of a 20% monthly payment,
it's unbearable.
It just provides a lot of heartburn.
Yeah, it is. Forbes, man, again, we wrote an article on you guys back in February. Again,
thank you.
No, you're very welcome. Listen, thank you guys. You've been around since 1972, so, but your dad, Todd McDonald, co-founded the bank in 1972 alongside Dr. Norman C. Francis, the chairman. What's been the feedback and the reaction so far? I mean, I never know what it's like when I go to write an article, and I always tell it's you guys' life, right? And I check in sometimes, but what's been the reaction when you get such major publicity like that?
Oh, very good reactions. I mean, we've had...
So it does work?
Oh, absolutely. Absolutely. So that's why I didn't need to keep you. You did very good work, And just really appreciate the nuances that you pegged in the article. You talked about how just being who we are as a Black-owned institution is in the financial sector.
Right.
Liberty Bank and others in the minority depository sector typically had not had access to capital to grow. So we're a bank, and we had trouble accessing capital ourselves historically.
Yeah.
And so now many of us are in position to grow and to expand our outreach and output. And so the article definitely provides a lot of fuel for us to have those conversations. And we're very grateful to you and your publication for highlighting us, because a lot of our banks don't have the big marketing budgets like very large institutions. And so opportunities like this do not come very frequent. So we, again, appreciate the nod and the highlights and just the showcase of our institution.
Well, I mean, listen, again, you guys did all the hard work. And your dad, again, I was so impressed when I was sitting and listening to his story. And, we're sitting, down in New Orleans during the Super Bowl time. And, for those, who don't know, this bank started $18,000 your dad was making at one point in his life.
Yeah.
And it started with that $18,000. And then here you go, it goes from $2 million and in business for 52 years, profitable for 47 of those 52 years. But again, as I went around doing research about your dad, I would always hear, they would say, Todd McDonald, oh man, that's the godfather of community bank, that's the godfather. Like, if you had to describe your dad in one word, is that what you would call him, godfather?
He's a lot nicer than the Godfather.
No, the Godfather was nice, though. He spared a lot of lives.
Well, you're right. No, but he's very generous, and I think the position that he's held for so long is very fitting, because in a community banking setting, you have to be very empathetic and passionate about the work that we do. And so it does not come very easy to do those things, to be profitable 47 out of 52 years. That is pretty unique, especially in our space. And then going through Hurricane Katrina in 2005, where we literally lost everything and had to restart the entire bank.
And so I don't think people understand the magnitude of that. Overcoming Hurricane Katrina, right?
Yes.
No power. Your bank's flooded. Your dad has to go down to Baton Rouge, was it, to take orders over the phone by hand?
Correct.
The dedication is like, man, if this bank was dedicated to do that, like, I wonder if they would run through a wall for me. And then overcoming Katrina and then the financial crisis. And I mean, to get through all of that and still be standing is just like extraordinary.
It's phenomenal.
As a black-led and black-owned bank.
Yes. A lot of people call us God's bank, and we're not, pushing back on that by any means, because a lot of things happen that were not normal. And when you combine expertise with the situation and with faith and passion, it all comes together and makes, what we have today.
Yeah. What's it like being the president of a bank and the CEO in waiting, right? We all assume that the CEO seat is yours. It's warm. Your dad still has it right now. He hasn't quite passed it to you, but I'm assuming, I'm going to go out on that risk and say you're next in line. But what's it like being that president? And do you get anxious like, Dad, you ready to retire yet? I want that CEO role.
It's a very unique position. And, very big shoes to fill.
Yeah.
And so I want to do it right. I want to make sure that the timing's right, not just for myself, but for him and for the organization. And we're taking into all of that into consideration. And, I've been in president for 3 years now. And so I definitely know where the bathrooms are. And I've been with the bank, though, for 22 years. So this was my only professional job out of college. So when I graduated from Morehouse in 2003, I entered into Liberty's headquarters. Yeah. And I've been there ever since. I always joke because I'm 44 years old, and so I always say,
44 years young.
44 years young. I'll take that.
Yeah.
I always joke to say that I've been around Liberty all my life, but I've only received a paycheck for 22 years. So I'm working on some back pay options. I'm trying to get my angles just like you.
I hear you. I was going to say, man, New Orleans always going through some back pay. I was going to say the Lil Wayne thing, but I'm not going to go there. But what's been the biggest positive surprise of the role, right? I mean, again, you've been in banking practically all your life, but here you are as a president. What's been the biggest positive surprise?
Oh, many positive things. I think in terms of the way banking is moving forward, it's exciting. We're adjusting our platform to make those adjustments so that we can survive another 50 plus years. And so I'm very honored to be in this position that Dr. Francis and my father and the executive team and the board chose me to take, the next step to move the company forward. And so a lot of positive things in terms of our sector, community banking space. This new administration has doubled down on understanding that community banks like Liberty banks are very necessary for our country to move forward. And so it's very exciting. The Secretary of Treasury, he's made some very bold statements and some really...
He seems in support of community banking and shifting the power back to community bank, if I'm reading that correct.
Yes, that's how we read it. And look, big banks are not bad at all. And a lot of us have very strong partnerships with a lot of the larger institutions. And so if you go back to COVID and PPP, you saw why community banks were so important, or it reiterated our importance in the marketplace. Because if you have a lot of concentration and you have a pandemic such as COVID happen, you have to spread it out.
Nice.
And so we have 4,600 banks in the United States right now. About 150 of us focus on underserved communities and in communities that are overlooked. And from what I'm hearing so far, we seem very aligned in terms of making sure that we're strong, we have strong balance sheets, and that we're trying to expand our output and exposure.
Yeah, absolutely. How about the biggest negative surprise, right? There's always negatives when it's positives. What's the negative one? One that you just wish go away today?
You know, I don't wish that anything necessarily goes away. I think everything comes together for
Not even
a
the
reason.
defaults, not even the write-off.
Well, the defaults, yeah. But then, you know, we've done 12 acquisitions of banks in our history, and a lot of them, unfortunately, were failed institutions. And so there's a space, again, going back to if there's an obstacle, there's an opportunity. And just making sure that the banking sector is well positioned to withstand the defaults. And I think getting through this type of environment is going to be a feather in all of our hats when we get on the other side of it, because we'll know how to navigate a COVID, we'll know how to navigate high tariffs, we'll know how to navigate massive layoffs or government adjustments to the marketplace. And so, again, I think defaults is definitely, you know, you don't want too many of those, but it comes with lessons that are going to get us through challenges going forward.
Yeah, most definitely. Take this one to the Forbes BOK members that are in attendance. Thank you guys for coming. But Shauna, right? I hope I'm saying that correctly. Shauna? Yeah, there you go. I said Shauna, what lessons have shaped your leadership style as you continue your family's legacy and evolve Liberty Bank's mission for the next generation?
Understanding the passion, because in trying times, you have to get through it. And if you're waking up every day, you know, not being in a good place or feeling pressure that you can't withstand, that's a red flag. And so I think when you experience challenges, whether it's professional or in family, you need that extra juice to get you through it. And just a lesson that I've learned working with my father, working with members that have been in banking since the 60s, and me coming in as a younger banker, navigating those challenges, you have to have patience and you have to have passion.
Yeah.
And that's the way that I've navigated the space. And that's the way a lot of younger bankers are navigating the space now.
Yeah. Well, listen, man, right fast, get into your background again. You grew up in New Orleans.
Yes.
You know, your dad was a banker, your mom more stay-at-home mom and driving kids around the community and all of that stuff. But what was it like being the son of a banker? Like, did you come home and was it cash money sitting on the couch on the counter? Like, what was that like?
So my grandmother was a driver for the school system, and my mom was a teacher until she retired. And it wasn't like a television show. It wasn't like Scrooge McDuck with diving in coins, not by any means. But so with my father being in the position that he's been in, it comes with a lot of time and dedication to other people other than our family. And so growing up as a banker's son, I knew, one, that his job was very demanding and that he most likely would travel a lot. And then, you know, we would also kind of go to functions and people want to pull him aside, or, you know, he'll find somebody that's in the corner and say, you know, that person's behind 60 days. And I'm like, what are you going to do? You know, so he's like, just a ton of stories.
Did he turn into the Godfather then if he was behind on money?
Well, you know, he's not shy about getting that money back. That's the core to our business. But just having, I mean, hundreds of stories like that, people coming over, a lot of successful business leaders, men and women from across the country coming to our home and enjoying family cooked meals, just exposing us to what is possible was pretty constant.
Yeah.
And so as I navigate my family and bringing up my son and daughters, I try to provide that same type of environment, because I think if we're exposed to it, we're comfortable with it. And when we're comfortable with it, we can adjust no matter what happens.
Yeah, but then here you are, right? You're living in this big giant mansion because your dad's a banker, and all of these nice cars are coming in. And I remember you telling me how you turned into a hustler at that point. You said, well, look, y'all gonna be in here partying with my dad. give me a couple dollars to wash your car and you'd be fine, right? And so you was making money while your dad was in there getting the loans back that he was owed to.
We're hitting it from both sides.
Yeah, hitting it from both sides.
Exactly.
Man.
So,
where did you get this at? Where did you pick this up at? Because you very well could have been in the house monitoring your dad, seeing how he talked to people, how he works a room, but here you were outside washing cars.
So I think it goes back to, my grandmother just, being a bus driver and her selling candy while she was driving. And she would sell Hucklebucks. I'll never forget this. And so she'll have spearmint and orange and all these different things. And she'll sell now-and-laters along while driving the bus. So she had the hustle mentality in her. And I probably pick up some of that from my dad's side as well.
Your grandma was Big Worm back in the day. She's running around driving.
Now that I say it out loud, it comes close. Yeah. But no, just understanding that nothing is given.
Yeah.
You have to earn everything you want. And as a kid, I'm the youngest of three. I saw a lot of toys that my siblings had that I didn't have or I wanted. And my parents always said, well, save up your money and you could buy it when you have enough.
Yeah.
And so, $20 back then, for a car wash, that was big money.
Yeah, man. Listen, shoveling snow back in the day. They don't do it nowadays, though.
Right.
They don't do it nowadays. But then, you made the interesting decision to go to Morehouse College in Atlanta. And, I was talking to another good friend of mine who also went to that college, and he called that the best decision of his life. And that was a strong statement, right? Because here he's married, got kids, but he says that was the best decision of my life up until he got married and had kids.
Got it.
You follow suit, best decision?
Absolutely.
To go to Morehouse, why?
Absolutely. I think the college itself is just it's a breeding ground for one, collaboration, two, thinking outside the box, being very creative, knowing how to survive. And I know a lot of HBCUs kind of get this, reputation of not being the most efficient institutions around, but with that comes teaching people how to navigate life. And I'd never forget going on the campus for the first time. My sister went to Spelman, so I kind of had a little exposure to it early on before I made my decision. But knowing that it's an environment where other leaders or other people that are like-minded come together and go through 4 years, or some people graduate early. I did not. But getting into that environment and doing college together and then leaving out and also seeing a lot of the people come back to tell their stories, you kind of see the pathway. And, I'm a big supporter or a big, person that believes in shadowing. And so shadowing provides individuals with access to professions and access to businesses that you may not have access to. And so when you had a lot of alum come back to Morehouse, share their stories, you could connect the dots and say, hey, if I go down that lane, I can be him.
Yeah.
If I go down this lane, I can be that person. And very, very successful individuals have come through Morehouse in the associated universities around Spelman, Clark, Morris Brown, Georgia Tech, Georgia State. So you saw all of that on Morehouse's campus. And uniquely, being at HBCU, you saw that with people that look like us.
Yeah. Yeah. And then, again, one of the fascinating parts about your story, your dad, who had mentored a white banker, told that same white banker, now you teach what I taught you to my son.
Correct.
Right? And then he helps you, and then here you are at Liberty Bank right now. Again, $1.1 billion in assets, right? And from what I'm reading from your annual report, the total income from loans, 10%. Is what you guys reported, I believe it was, that you guys made off of that.
Well, there's some details in that.
But another part is that you guys secured 107 million new deposits in 2024, right?
Correct.
And you're using that money as a fuel, right? Fuel for your engine. And again, you can then take those new deposits and use that money to loan out to people, right? And especially small businesses. Accurate, right? Great. I want to stop there because take it back to the crowd. Laurencia has another question. It says, as a small Black-owned business, I face challenges accessing capital, building trust, and staying resilient through uncertainty. And this is where we are right now, uncertainty. How can institutions like Liberty Bank actively support founders like myself and beyond financial literacy? What shifts do you believe are needed in banking to close the equity gap for entrepreneurs of color? I thought that was a very deep question, very multi-layered, but I give you the floor.
So what we see typically are small business owners, especially during unique times, they go out for capital and they don't receive the most favorable terms.
Yeah.
So whether it's a high interest rate, or sometimes you have founders or owners of companies that give up equity, give up ownership of their businesses to get a loan, to get capital in. And that's very, very, very expensive. And so what Liberty and other banks like Liberty try to do is provide loans so that when that founder or owner pays it back, the company is still theirs. And so we
What type of loans are we talking about, though? What type of loans?
Lines of credits. You know, a lot of small businesses get opportunities with big companies. And, you know, those big companies have a scope of work that need sort of capital to mobilize. And so the small business, let's just say if they have $1 million contract and they need $100,000 in mobilization funds, that business comes to Liberty. You know, we assess the entire program, the contract, and assess their financials. And then we try to provide that line of credit so that they can execute. And typically businesses will make 20 to 30% net of what their gross is. So if that, you know, that $1 million opportunity should translate into 200,000 to 300,000. So in order to get that opportunity to come to fruition, we provide the lines of credit.
Right.
Lines of credits are really good instruments. They charge interest only.
It is a great instrument. Not enough people, I think, take advantage of it, though. Like, they think, they hear the word credit and they get it mixed with credit card, and
Correct,
it just gets the. But I try to explain to some people, like, well, NBA teams run on lines of credit, right? They use their TV contracts as leverage, and they got to take out credits because they have bills to pay. They got athletes to pay every month. And believe me, those checks are not cheap. They run on lines of credits. This country runs on lines of credit. Is that a message that still gets maybe conflicted with some entrepreneurs, small businesses, because you immediately think, oh, let me go get venture capital, right? And of course, that's equity, but lines of credit, is that an instrument maybe not used enough in Black America?
I would say that's correct. But I think because a lot of small businesses, especially small businesses in communities of color, are not exposed to credit facilities that are, again, favorable.
Yeah.
And so the more business that the Liberties of the world take on, the bigger we become, the more we can provide those lines of credits. And so if there's only 150 of us kind of dedicated to this sort of certain space or this very niche market, how do we expand and make more banks adopt the business platform that we have into serving underserved and overlooked communities? And that goes back as just education, financial literacy. How do we educate that small business owner to understand that institutions like us are out there and are willing to give out capital and want to give out capital?
And have the capital
and have the capital to give. And so, you know, we do a lot of partnerships with a lot of large companies so that they can market. When I say market us, we partner with them. So they say, hey, we've identified an organization, a bank, that will provide you a line of credit for these contracts that we've given you as opportunities to build your business.
Yeah.
And so then just making the connections between the two have been tremendous.
Yeah. In order to get that line of credit, or if you want to get a mortgage loan or a car loan, you do have to go through the credit process, right? There are no more no-doc loans like we experienced back then. Those were good instruments too, but I'm not around to take advantage of it, right? Imagine walking into it and you say, let me get $100 million. Oh, here you go. They don't check anything, or no job, no nothing. We're gone from those days, but I know you're very passionate about trying to come up with the plan of getting rid of denials, right? You want to completely eliminate denials. So I want you to explain step by step how you plan on do that, right? Because getting rid of denial, that's a huge thing. Somebody with maybe a 500 credit score, I know you said we're not going to deny you. We'll show you how to get it up so we can say yes. What is the overall plan if you had to give it to me in a step-by-step process? How does Liberty Bank going to eliminate denials?
So, and just to be very specific, I'm not saying to approve every single loan with, you know, signing on a dotted line that day. I'm just saying that Liberty Bank and other institutions like Liberty, we provide a pathway to success. And so I want to incorporate approvals with conditions. So if Todd comes to the bank and wants an auto loan or wants a mortgage loan.
Not an auto loan, definitely mortgage loan,
but saying, hey, Todd, right now, we will approve you if you come up with X amount of cash or have a guarantor to, you know, come on the application with you because you've gone through a life event and your credit is in disarray. A lot of people go through divorces, or they lose family members, or they have their parents move in, and so they experience credit challenges where they're taking on other responsibilities that they were not used to. And so when you see those applications come in and you can identify exactly what caused it, then you try to isolate that event and look at everything else. And so most of the time, 80% of people want to repay a loan.
Yeah.
10, 20% out there that are looking for a easy way to come up with money and don't have to pay it. So, but that's the smaller amount, right? So 80% really wants to do well with the money that they obtain from the bank. And so what we're trying to do is say, hey, small business owner, you are approved with these conditions. And those conditions, you may be able to meet them right now, or you may be able to meet them at a later date. But you know that Liberty Bank is here to provide a service, and we want your business. We want to earn your business, because this is banking is about partnerships and collaboration and putting things together. That banks, especially in our sector, don't have home run loans that typically show up. We have high net worth individuals that support us, and we need that support. But for the most part, we're trying to work through the weeds of small businesses. Businesses, again, that are overlooked. Businesses that don't know about us. Businesses that have the opportunity but don't have the capital. And so there's no, slam dunk deal that shows up on a daily basis in institutions like ours. So to provide encouragement, to provide confidence, that's where I want to take our lending.
Yeah, most definitely. Love that, man. Listen, get out of here. Some long, fun stuff, right? Some outlook and some fun stuff. But I always start $1 million question, right? First million. How'd you make it?
As a bank or as?
Well, as Todd McDonald.
Well,
yeah.
I was in a lot of different things, especially after Hurricane Katrina. I was actually in the fast food space. So,
wow. Do you own fast food restaurants?
3 of them.
Wow. Which ones?
Steak Escape.
Okay.
It's a franchise based out of Ohio. And the client, so the owner, before I purchased them, was a client of the bank. And when Katrina hit, him and his wife decided to not pursue the business going forward. And so as a commercial lender, I knew the financials, I knew the numbers.
Great thing about being a banker, you get all those inside deals. Yeah.
Well, yeah, we wouldn't call it inside, but
Yes.
being observant.
Yeah, observant, yeah.
And so so that was sort of my first, I guess, big business, if you will, outside of the bank, because I was still working at the bank. So again, just trying to have as many revenue streams as possible. Real estate has been very good to my wife and I, my family. We've made a lot of transactions that we walked in with, equity day one. And so that's why I like real estate. I really feel like it's a very tangible asset that you can look at if you get in trouble. You could restructure, you could use it for different things to start a business, you could, lend against it. And then, my wife is in a number of businesses as well that she's done very, very well with. And it's just finding the right ones that you wake up and think about.
Yeah.
And again, I think I might have mentioned this to you when you're down in New Orleans, but now if you say, hey, Todd, we can make a lot of money making these caps. That's not my passion. Good luck, Jabari. You can go ahead and make these caps without me. But just understanding what motivates you is very important, because if you're a professional and you're successful, you should have a lot of opportunities that come your way. So you always have to understand which ones to say no to.
Yeah. So you had your first million, again, real estate and the restaurant franchises.
Correct.
How did you spend your first million?
Well,
2 new Porsches and things?
No, definitely not. Not at that time. So just growing, trying to grow it.
Right.
And so I'm a big person that likes to see things, 40 years out, 50 years out. So literally my wife and I, we have a spreadsheet that goes to where, past retirement age and in different categories that we want to have assets in and what those numbers are. And so really being intentional about diversifying assets and then understanding what risk tolerance you have.
Yeah.
And so making sure that you have your riskiest stuff, kind of, things that can go away tomorrow. That's not our biggest bucket. Our biggest bucket are things that should withstand our entire professional career.
Yeah, most definitely. Outlook stuff, take it back to the Forbes BLK community. Owen, financial inclusion is a pillar of Liberty Bank's mission. How can AI systems be designed to eliminate bias in lending while staying ahead of regulations like HIPAA and General Data Protection Regulation, otherwise known as GDPR? Can ethical by design AI close the trust gap in underserved communities?
To be determined. Not sure.
That's scary, Todd, to be determined.
Yeah.
I thought you was going to say no.
No, it's you see it. You see a lot of mistakes that AI and technology are coming back with. I mean, if you look up certain things, just within the banking space, some stuff comes back not correct. And if someone is basing a loan decision on incorrect information, that's not going to play out well for the client. And so we're typically looking at adopting technology to help us service more on the service side, not on the decisioning side. And because, again, a lot of our client base, they have a W-2 income, they have a small business income, so they have all of these different parts to making up their total cash flow and revenue.
Right.
And mistakes could be made easily if you apply an AI component to something that has a lot of more nuanced kind of
And human judgment.
Correct.
And,
Correct. So not saying that AI is bad, but we're being very careful. We're not the early adopters in banking. We have to be very, very thoughtful, make decisions conservatively, and make sure that we don't misstep. And so we've adopting stuff on the customer service side, on the servicing side, and AI. I think it's again to be determined.
Yeah. Again, I don't like that to be determined thing. I like real answers. Black Outlook, Black America Outlook. Nielsen says Black America spending power will reach 2.1 trillion by 2026. 2.1 trillion by 2026. When you hear that figure, what instantly comes to mind?
We're leaving a lot on the table.
Leaving a lot on the table.
Yes. Our community is leaving a lot on the table because, again, we don't own a lot of the businesses that we purchase from. You have, a number of banks. You have a number of financial institutions that are there to help, figure out that wealth gap. But when we're consuming more from companies or individuals or products that don't originate from our community, we're losing. So our wallet, spend and share is very small. And so how do we make very intentional adjustments to supporting certain businesses that support our communities, urban, rural, wherever? I think just holistically, everyone that is consuming a lot of these goods needs to be very intentional about supporting businesses that support their communities that they're in.
Yeah.
And when you do that, the multiplier effect comes in.
Yeah.
So more jobs. With more jobs, you have more people buying homes. With more homes purchased, you have larger tax rolls. So it's a domino effect that can take place in communities. And so, you look at America and you have all these different neighborhoods. And so, I was looking at something online where they're saying, overseas, they're just going to start building buildings where they have everything in the building. Mm-hmm. But it's not a bad concept because at that point, all of the money that's being made from groceries to doctor's offices to, hair salons to barbers, all of that's staying in that one structure, and then it's going to replace the windows. You have climate change that'll happen. You have hurricanes, so now you have money to change out the windows to be hurricane proof. So self-sustainability is something that our community has not been able to take advantage of, but that's where we need to go.
Yeah, I think we're headed in the right direction now. I really do. There's momentum there. And I haven't been to Target in I don't know how long yet. That's just me. I haven't been there. That's me. Target or Walmart, right? I'm not going. Not now. Not at least I need some tissue. No, I'm playing. Listen, look around the world, right? Where would Todd McDonald put his money right now? Which country would you invest in right now outside of the U.S.?
Continent of Africa.
Continent of Africa. Love it. 3 books. Forbes BLK. Let's have a book club. Summertime's coming up. 3 books that inspired you to perform your best or motivate you.
I'm actually reading the 5 Types of Wealth right now. From the title, it could come across as, this is money focused, but it's actually not. Like the 5th component is the money side. So 3 books. So that's one. The second one I really enjoyed reading was The Snowball Effect. And then a third, man, you put me on the spot. I asked for these questions in advance.
Yeah, I know. That's why I didn't answer you on purpose. I never give questions in advance. It's no fun if I did that.
I would say Don Peoples has a really good book. And then, that's the 3.
That's the 3. That's not bad. It's not bad at all. I'll get you out of here on this, man. Good to great. What's the difference between a good bank and a great one?
I think a bank that positions itself for the future beyond that cohort of bankers, positioning the bank's balance sheet to withstand down times, good times in the future is going to be the separator.
Yeah.
A lot of times decisions are made to survive a certain period of time that may only be 3 years, 4 years, 5 years. You saw that with some of the banks on the West Coast that failed. A lot of decisions were made for 30 years out, 20 years out, but they made it in that one decision, did not think about anything that was going to change from that point. So I really feel like leadership in banking has to be mindful of the people that are going to come behind them, as well as understand that challenges are going to take place. That's how we grow. Typically, you work out, you go to the gym, you breaking muscle to build. And that's the same with banking. Yeah. So we always have to prepare for the worst while we plan for the future.
Yeah. O for obstacles, O for opportunities, right?
Yes.
Todd McDonald always says. Hey, Todd, man, thank you so much for the time, man. We see you at the BOK Summit, right?
Absolutely.
You're coming down there, right, in Atlanta?
God willing.
Of course. You got to be there, man. If you don't come, I'm never talking to you again in life.
Well,
never calling you again. I'm telling you, I'm trashing Liberty Bank.
I'm there.
I appreciate it, man. Thank you so
it.
much for the time. And you got to come back, talk economy, man. A lot is still going on within the Black America, man. Again, so much to discuss, and we can't all do it in one show.
I look forward to it.
Absolutely. Todd McDonald, Liberty Bank, Michael Corleone, I should call him. You're in the Nasdaq Enterprise Zone. Thanks for watching. Thanks for listening.